Rajat Jain, CIO at Principal Mutual Fund. He's joining us right now on the phone line. Rajat, thanks very much for taking out the time.
Sure.
What is it that you're advising in these dire times, Rajat?
The times are so uncertain. So what we are telling investors that while the markets have corrected, the markets, it is potentially, if you're looking for a medium to long term, it's a good time to invest, but invest slowly, invest in a calibrated manner, because uncertainty is going to remain high for a while. Earnings certainly for this quarter are going to take a dramatic hit, and probably next quarter or so, certainly, given the slowdown we're going to have. So, and we will see, given the uncertainty, I don't think the markets, even when they do recover, don't go up sharply. So, yes, come into equity, but take your time, invest in a calibrated manner, invest slowly. If you look at essentially, if you look at the companies themselves, I think it's a good idea to come in a multi-cap fund, which has both mid-large and small caps in them, rather than come into, narrowly focused funds like a thematic funds or so on at this point of time. So invest slowly, good to come into equity markets, but take your time, invest in a calibrated manner.
Rajat, while obviously, it's already been built in, to what extent do you feel the earnings impact has been factored into the current prices? Do you feel that the next 2 or 3 quarters have been factored in? Because this is going to have its second order effect even in the coming few quarters, not just the quarter in which we have seen.
Absolutely. I think at this point of time, the PE multiples, because the earnings themselves are uncertain, so I don't think the PE multiples matter a whole lot. I think you will look at the price to book multiples really at this point of time, because earnings is so uncertain. In many cases, could be negative earnings growth there for companies. So I think first of the market itself, it's certainly a financial impact, but more than it's actually a public health emergency. So the markets themselves will take some heart and probably stabilize when the number of cases begins to plateau. When you find across the world, not only India, across the world, incremental number of cases, number of deaths is beginning to slow down. That's when the markets are going to at least take some breather. So as of now, to say is the earnings damage for the next 1 quarter or 2 quarters built in, certainly for the next 2 quarters, we are not going to see recovery in the earnings. This quarter is certainly a washout, probably a June quarter very likely as well. And then we'll have to wait and see how things recover from there. But, what's really happening as a consequence of all this, the people who are going to get impacted, so leveraged companies, it's more, and they certainly will have to, the regulators, the RBI, the central bank, will have to come and give some sort of moratorium to businesses. So I think the people who are going to get hurt substantially will be the small and the mid-sized businesses. I think large-sized businesses, large-cap companies would come out better simply because of the environment in which they are in. So we'll see, I think, more polarization, certainly for the rest of this year in equity markets, I think.
Rajat, good morning. Neeraj here. There is a lot of talk about the credit crunch at the US end of the market. I don't think we'll be too far behind as well, right? What do you think could happen to credit in the system and thereby to borrowing costs, to NPAs, so on and so forth?
Yeah, to your point, certainly there are 2 things we got to look at: the credit crunch in the financial markets and then in the real economy. So in the financial markets, while yields have gone up at the shorter end, but there's no sense of panic as such in the financial markets. Liquidity is there, bank CDs, CPs, yields have gone up, but liquidity is still there in that market. But coming to the real economy now, I think it's going to be much more of a challenge for mid-sized businesses. First of all, I think there will be, given the slowdown that we are seeing, a lot of the mid-sized businesses, consumers actually, are going to take a hit as well, because those consumers who are not on salary, and a lot of Indians, we know that, a very high number are not in the so-called formal chain. They are virtually, they earn daily or periodically. They are not on the salary. So I think there will be an impact, and which I think is going to play out in the case of banks or NBFCs who have such credit on their books. It will, I think, be a short-term impact. It will not be permanent damage, because once this thing goes away, people again begin to spend. It won't be a permanent damage, but for the next 2 quarters, we are going to see some impact in that part of the real economy. Financial markets, we are not seeing a credit crunch. GSEC is liquid, CDs are liquid, high-quality CPs are still being dealt, so I don't think any issues in that part of the market.
Rajat, what I meant to ask was that banks might just not lend enough to the system, and therefore there could be a credit crunch out there because of all the issues surrounding bad loans. And I'm just wondering, just extending this argument to what is it that's happening to the banks in the current scenario? Is this purely for over ownership by FIs getting corrected? Because even on days when the markets are stable, as is the case right now, when it looks to be a bit more stable than other days, prime banks like HDFC Bank, for example, are still trading in the red. Is this just over ownership by FIs getting corrected, or is the market worried about loan moratoriums or EMIs not getting paid, or a mixture of both? What is ailing them?
Absolutely. Part A, what you just said, there is some over ownership FI. It's a big part of the global indices. So when FI is selling, it is going to certainly hit them disproportionately, no doubt about that. Also, as we just said, they will have to, and rightfully, I think, some loan moratorium for the small businesses. And, the balance sheet growth, though actually when the things recover, I think balance sheet growth actually could come back, but we will know when things actually happen. So I think, yes, there will be issues on NPAs, but my only point is we don't think for the consumer end of the business it will be a permanent damage. For small-sized businesses, SMEs, I think it would be a more long-lasting damage to banks who have lent to such businesses, which I think pretty much a lot of people have done. So I think it's both of these. Technically, we are selling, and plus also the fact that there's going to be a slowdown and there will be a hit on the NPA.
Rajat, in light of everything that's transpired, do you feel any space is now extremely attractive, or the valuations look too mouth-watering to ignore?
Yeah, I think you are. You are finding good large cap companies available at virtually high single digit, low double digit, multiple. And found them in consumer space, in utilities, in some autos. So yes, only thing is, while it is a good time to invest, it is not. Can I say, is it the right time to invest? That is, if you buy, market will not be down 5% tomorrow. No one knows that. Market could be down further 5 or 7 or 8% tomorrow. Will we come out of this crisis? So, but having said that, if I invest today and hold it for a 2 to 3 year time period, will I come out well? I think so. You will come out well, given the valuations there are. So I think you don't have to go far. In large cap, as I mentioned, consumers and autos and utilities across actually are finding good quality companies, which we know are going to survive, are not going to go away. They have low leverage, and they're available at probably low double digit or high single digit multiples in some cases.
I heard you say auto, Rajat. Auto has been plagued by problems even before coronavirus, and that just amplified the issues for the auto space. Now there are, we had a conversation with the chairperson at the FADA, and they are talking about approaching the Supreme Court to give them an extension for the BS4 models, and how far into May can they go to sell the inventory that's lying with them of 8.5 lakh units. So do you still feel that autos could be watched a little more before an investment decision is made?
Yes, as I said, there's no guarantee. If you buy today, you will not see a 5% or a 10% down from these levels. So absolutely. So the idea is to probably invest slowly, calibrated manner, staggered manner, probably over the next quarter or so, 2 quarters potentially or so. So yes, in autos per se, actually, they look interesting. There are interesting bets in autos. both, I would say, two-wheelers, four-wheelers, passenger cars, yes. We are seeing, yes, there is dislocation in the economy. You just mentioned about the FADA approaching Supreme Court regarding the BS4 inventory that they are carrying on the showrooms. So these will remain in the near term. But I think if you step back, look at 2 to 3 year time horizon, given the very low valuation and the fact that these companies are not going to go anywhere, will not find increased competition, they have low leverage, I think they will probably come back in 2 to 3 years time with decent returns in it.
Rajat, one final question from my end. What is the, aside of the usual, what is something that worries you, aside of what coronavirus does to economy is one thing, and I think it's an imponderable, or it's a ponderable without any definite outcome. What is something else that keeps you worried?
No, I think the impact on consumption, and especially I think small and mid-sized businesses, is going to be, I think, quite severe. So we heard the PM speak yesterday, and the economic group who's going to look at that, presumably looking at these kind of things. So because 90% of Indian workforce works in so-called informal employment. Yes, they are not in so-called organized sector. They're working on small stores, working in self-employed jobs, things of that nature, who are going to really get a rough end of this situation at this point. And because they really drive a big part of the consumption. So I think for the economy to come back, I think we have to see that the small businesses, the people who are in the so-called informal employment, I think they have to be brought back. I think this damage is going to be quite brutal and severe on them.
Rajat, I'm just wondering, before I thank you though, as we look at the markets so volatile, the Nifty is bobbing between the red and the green simply because banks are taking it on the chin. HDFC Bank is down 6.5%, IndusInd Bank is down 6.5%, ICICI Bank another 2%, and Bajaj Finance is now back in the red. It's a bit of a repeat question, Rajat, but and therefore my question is bent more towards the investing side. Would these issues surrounding these banks, both over ownership and selling by FIs as well as maybe MSME, SME moratoriums, keep you away from buying into these perceived valuations that these stocks are trading at right now?
See, in our portfolio, while banks and financial is the single largest weight in the benchmark, but we have been underweight these stocks in our portfolio. But then, so to your question, will I not have banks? Oh, absolutely, I will have banks in my portfolio. Why are the largest weight in the benchmark? Because they are the sort of...
Rajat, sorry to interrupt, Rajat. My question is that, are you comfortable buying them right now? Are you comfortable buying a bank of the quality of HDFC Bank, for example, or a Kotak Bank in this current scare at these times?
Yes. To answer your question, yes.
Okay.
What we've been telling, so we are doing what we're telling our investors to do. See, we don't keep large amount of cash. To the extent we do have cash deployed we have cash available with us, we are going to do staggered buying. That's exactly what we're telling our investors to do. The things are uncertain. You will potentially get things cheaper, but should I be investing in the markets today? Yes. So absolutely, high quality franchises which we know are not going to go anywhere. We are going to, including banks, we're going to have them in our portfolio.
Viewers, remember, this is not a stock-specific recommendation by any stretch of imagination, but just his views on what he believes some of these mid-sized names could do. Thanks so much, Rajat, for joining in today and giving us your perspective. Really appreciate your time.